Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. First one of the week. It is Monday, May 5th. We're going to take a look at Lennar. This is out of the consumer discretionary sector. It is a home builder. Before we get too far into the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you're subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday. We take a look at a company stock, run it through my screener, see if it makes it onto my watch list. I also do a portfolio update every Sunday. So again, click that notification bell so you're notified. Make sure you're subscribed and hit that thumbs up. Make sure you watch the videos to the end. Watch time is one of the metrics that the YouTube algorithm uses to push out the videos a little further, and share with anyone you think that might find value in the content also. Really appreciate everyone who's taking the time to do that, and a special thank you to the viewers and subscribers of the channel. The channel continues to grow because of people like you. Now, this is the Vested Interest stock screener. This is the criteria we will be running through today in the video. It must meet 5 of 8 to make it onto my watch list. If this was a company out of the financial sector like a bank, we would add in price to book with 1 being fair value. Don't blindly use 1 as fair value and price to book for companies outside of banks. It really is specific to banks, some insurance companies also. So if you're looking at something, let's say in the consumer discretionary sector like this company, or in the industrial sector, compare that company to itself over time or to other companies in the same sector doing the same type of business. And then you can kind of get a gauge of whether it's fairly valued, undervalued, or overvalued based on its historical price to book, or again, how it compares to other companies. All right, let's get back to Lennar. You can check them out on their homepage, www.lennar.com. That's www.lennar.com. That is their homepage where I pull this information from. Lennar history. Since 1954, Lennar has built over 1 million new homes for families across America. We build in some of the nation's most popular cities, and our communities cater to all lifestyles and family dynamics. Whether you are a first-time or move-up buyer, multi-generational family, or active adult. And they do, and that's really their bread and butter, right? They're a home builder. But they do have some interesting new techniques that they're using. They have partnered with a company called Icon. Together with Icon, we are advancing home building innovation with on-site 3D printing. That's right. They're using 3D printing innovation, which you might think of, companies like industrial companies using it to make car parts or something like that. But this company is using it to pour concrete in the same type of manner that a 3D printer uses plastics to make it. They can make whole homes, right? Leveraging Icon's technology offers a promising path toward delivering affordable, technology-driven homes that meet rising demand, address housing and labor shortages, and deepen our commitment to building with resource-saving and energy-efficient materials. So those of you out there in the construction industry like me who thought automation, AI was not going to take away your jobs, well, here it is, right? If they can use 3D printing to do all the exterior walls, for example, and make them out of concrete with just a boom truck, a laptop, and one person running the boom truck, and then a bunch of contractors bringing in concrete in concrete trucks. Well, there goes a whole lot of framers jobs, masonry jobs as far as block and brick. They are being replaced by automation too. So no job is really safe from that, regardless of whether you think you're safe or not. It is going to impact all of our jobs in the future. Technology is coming, and in a lot of cases, it is already here, as you can see with this company Icon that's partnered with Lennar, being able to build whole homes as far as the framing portion of the house, exterior walls, interior walls, with 3D printing. So it's already here, and there are already homes down in Texas, I believe, that they have already built to prove this out. And then they have a bunch of arms under the Lennar umbrella here. Cortera, founded in 2011, offers rental apartment communities nationwide. Cal Atlantic Homes, so that would be your home buyer of choice out of for California homes and probably that region out there. WCI Communities creates architecturally exciting homes and luxury condominiums in Florida. Lennar Mortgage, so you can get your mortgage through Lennar, right? If you're buying your home through them, I'm sure they're trying to package you a mortgage deal. Insurance, they offer home insurance as well to be your title company. There's Lennar Title. Friendswood Development Company. For more than 55 years, Friendswood has been creating the finest master plan communities across virtually every area of Houston. So that's down in Texas. Calla Homes again. I think I may have put that. Yep, I put that twice down. So apologies there. Village Builders offers unique luxury homes of exceptional quality and premium craftsmanship in select locations. So there's another builder that they have, and these are all under their overall umbrella here. So all Lennar. Part of Lennar, but just different names, right? So a lot of them are home builders scattered across the country, but then they offer their own mortgage, title, and insurance arms as well. Now, the reason we're taking a look at them, down 1.31% on the day. We are talking about Lennar Corporation, ticker LEN-B. Now, there is a couple Lennar tickers out there. There's LEN, LEN-A, and LEN-B. I looked up -B because this is the one that I saw Warren Buffett had picked up a while back. And I'm not saying he bought it. There are other people, and he's no longer part of, I guess he's going to be stepping down from Berkshire. He just announced that. But there are other people that do buy it. So I'm assuming this was bought by someone else in his company, but it could have been bought by him, and it's in their portfolio, the Berkshire Hathaway portfolio. So I looked up the len-b, LEN-B shares. This is out of the consumer discretionary sector. Closed out the day at $103.07. 52-week range as low as $94.09, as high as $168.25. They are currently within 15% of a 52-week low and much closer to their 52-week low than their 52-week high. Market cap of $28.509 billion. A beta of 1.43, so they are more volatile than the overall market. And if you were buying this one, I would try to use that volatility to your advantage, buying it when it's close to its 52-week low, holding off whenever it runs up. That's just my recommendation. You do whatever you want. Price to earnings ratio, PE ratio, seems pretty low, but I would compare this to other home builders because a lot of times they are lower with a current 7.52% price to earnings ratio, $7.52 per share. Earnings per share is almost twice that at $13.70 per share. So it's one of the rare times we see a higher earnings per share than a price to earnings ratio, but it does happen from time to time. Earnings date, June 16th through June 20th. So coming up next month in that window. Forward dividend is $2 on the year. They are a quarterly payer. We'll see that here in a little bit. And they do have a starting dividend yield of 1.91% currently. 1 year target estimate, Yahoo Finance did not have it listed. But jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. It's a quick check. To do that, we look at their 5-year dividend yield average of 1.38%. We compare it to the current 1.91%. Or over here where it says forward annual dividend yield, 1.91%, same number, right? I know it says forward, but it's the current. And since it is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Payout ratio is really low, 14.60%, so they have a lot of room to continue to raise that dividend over time, and it does not look like or appear that they are in danger of having to cut that dividend anytime soon. A lot of room there. I like under 75%, so 14.60 is very, very low. Dropping down, I want growing free cash flow over time because I want companies to be able to buy back shares, make acquisitions, reinvest back into the company, pay a dividend, which this company does, raise that dividend over time, maybe even take some of that free cash flow and hold it as cash on the balance or investments on the balance sheet. So their free cash flow here going back to September 2022, you can see $3.2 billion. Up in 2023 to $5 billion. 2024 looks like it was a bit of a downturn to $2.2 billion, trailing 12 months at $1.5 billion. But keep in mind, we're only in May. So the trailing 12 months includes part of 2024 and the first, through April and a couple of days into May now. Repurchase of capital shares, they are repurchasing shares, again, going back to 9/2022 here, September 2022, $1 billion pulled out of the market, a little bit over in 2022, 2023 up to $1.1 billion and some change. 2022, now you can see that their free cash flow dropped here, but they did double their repurchase of shares. Now, I don't know, you'd have to do the math, but it looks like that might not account for the total drop there. So I am saying a downturn from 2023 to 2024 there, even though they increased their repurchase of shares. And in the trailing 12 months, looks like they're continuing that trend at $2.4 billion in shares that they're pulling out of the market. Jumping over to stockanalysis.com, where I pulled this information. I am not affiliated with Yahoo Finance. I'm not affiliated with stockanalysis.com. Just two sources I go to for information, and I do recommend more than one source so you can make sure the information you are looking at is accurate and up to date. They do have 15 analysts that have taken a look at this. It's right on the edge of a hold and a buy, leaning slightly towards a buy. So if you were to go to their stockanalysis.com's homepage there, type in len-b, look up this one. You'd be able to go to under forecast, right? Overview, financial statistics, forecast, dividends, history, profile chart, all the different tabs. Go to forecast. You'd find this, and you would be able to click on each one of these little tabs and say how many might call it a strong sell, a hold, a buy, or a strong buy. So it's just slightly leaning towards buy out of the 15 analysts that have taken a look at this. Low estimate of $110, so it currently sits lower than their lowest estimate, so that would represent a 5.39% increase from where it currently sits. Average estimate of $140.33, that would represent a 34.45% increase, and if it happened to hit their high of $180, that would represent a 72.46% increase, and you could collect that right around 2% dividend yield along the way while you waited for this to rebound, hopefully back up to that 180 high if you own it. Now, jumping over to the right under the statistics tab, I like to look at return on capital employed, right? We used to look at two metrics, return on equity and return on invested capital, but we've since simplified that to return on capital employed because it is a bit of a mixture between the two, and it makes it easier just to look at one metric on this initial screener than to look at two. Now, I like 10% or better here. And the return on capital employed is sitting at 15.18%, so it's over the 10% I'm looking for there. EPS growth, I like 5% or better forecasted over the next 5 years. It's sitting at 10.72% forecast, and revenue growth forecasted at 5.97. Now, obviously, this is a builder and is subject to market conditions, right? If interest rates for homes, mortgages, for example, are really high, sometimes that'll back people off from buying new homes or refinancing. And then sometimes whenever we have downturns like a recession, that would obviously impact potential buyers as well, right? If people are getting laid off, they're probably not looking to go out and buy a new home, right? There might be some, but it will definitely decrease the amount of people that are looking to do that. So keep that in mind is what I'm saying. This is a bit of a cyclical company based on, and typically construction is the first one to go when the market gets hit or when the overall economy gets hit, jobs and that sort of thing, and it's the last one to come back. I mean, my dad was a mason. I grew up in construction. I'm still in construction management myself, so I'm well aware of how budgets start pulling back when things start to get shaky, and then they are the last one to pull back or to come back whenever things get good again, right? It just is the nature of construction in general. All right, we're going to look at the history here as we wrap this one up. Quarterly payout ratio of 14.53%, very low. Dividend growth, double digits, 14.29%. So even though it is a low starting dividend yield, nice double-digit dividend growth. Growth of years, they're saying 1 year. I actually think it's more than that. They just haven't raised it yet in 2025, but they need to raise it here in 2025 or they will be restarting again. Buyback yield is positive. That means they're buying back more shares than they are putting into the market efficiently. I like that. Shareholder yield is positive at 6.39%, like that too. Now, this company does pay off schedule from most companies, February, May, July, October timeframe. And going back to October 2022, you can see here they were paying 37 cents and some fractions of a penny, raised that up on January 2024 to 50 cents. They have not had a raise in 2025 yet, but they did miss that 2025 January raise. They didn't raise it like they did in 2024. So I would anticipate if they're going to maintain this dividend growth, it's going to come in their next two report outs, right? Either the one here, we're past April in July, or the one in October, right? And then they can maintain that dividend growth because they raised it once in January of last year. So they've got the rest of this year to come up with one more raise here to maintain that dividend growth. We'll see what they do. All right, jumping back to the screener, understand the business, right? This is a home builder. I am still in construction management. I used to do something on the home side. I'm more in the commercial space now, but well aware of what this company does. Check there. Growing free cash flow, no. It looks like we had the one down year. Growing dividend, yes, we check there. Dividend payout ratio is well under 75%, right? It's around 15%. Check there. Dividend yield theory says they're potentially undervalued. Check there. It is within 15% of a 52-week low, so check there. Return on capital employed is over 15%, so it definitely is over 10. Check there. And earnings per share growth is around 15%, so check there. We're looking at 1, 2, 3, 4, 5, 6, 7 out of 8. This is on my watch list. It has been there for a while. I am trying to build out some existing positions right now, but I am also looking for something out of the consumer discretionary space, and this one definitely has my eye on it. Let me know what you think of Lennar in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments in the comment section down below. So drop a comment down there. Let me know what you think of Lennar. Is it in your portfolio? Is it one you're watching? Maybe it's one you're selling. Are you part of that downturn today? If you have a company like Lennar you'd like me to cover in the Stock Pick of the Day video series, drop it in the comment section. I'll try to work it in on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend. We will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, investing in educational and entertainment purposes. If investing involves risk, you can lose money. You should never invest any amount you're not comfortable with. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. Hey, for those of you who made it this far, thank you for watching. Don't forget to hit that subscribe button. Like, share with anyone you think they might find value in the content. Drop a comment and let me know what you think. And thank you for watching to the end.